Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's Monday, the 13th of March, and we have Lee Kian Soon, CEO of Astral Asset Management, as our guest today. Kian Soon, great to have you on the show this Monday.
Good afternoon.
Now, Kian Soon, before we get your insights, we're going to take a look at how regional markets have performed over a turbulent weekend, but we will start with cryptocurrencies. Bitcoin is at 22,384. It's up 9.81%. Ethereum is at 1,597. It's up 9.01%. Now, looking across the regional stock markets, we've got the KLCI, which is down 0.86%. Shanghai is up 0.72%. The ASX All Ordinaries is down 0.48%. The Nikkei is down 1.51%. The Hang Seng is up 2.02%. The Kospi is up 0.37%. Very mixed market today. Kian Soon, tell us why, despite the turbulence over the weekend.
I guess it's a mixed bag, as you mentioned, but overall there's huge relief that Asian markets woke up, after they hear what the central banks and FDIC decided to do for the US banks and guaranteed the deposits of Silicon Valley Bank.
Okay, so I just want to recap what happened over the weekend so that the audience has a context of what this whole banking crisis and banking bailout is all about. There were the Silicon Valley Bank, Signature Bank, and Silvergate Bank were all basically taken over and all their deposits guaranteed by the Federal Deposit Insurance Corp, which it is now under Federal Deposit Insurance Corp receivership. What that does is all the depositors will get their money back, and there's no risk of contagion, which was the worry over the weekend as the events unfolded. But Kian Soon, kind of break it down for us. What was the whole fuss all about, and how did this happen?
Yeah, it's very interesting because I think it all started with Silicon Valley Bank, which is a bank well known for taking deposits from all the startups as well as all the venture capital funds. And your stash with cash over the last few years due to the COVID crisis, the deposits was growing, and the banks need to basically put the money to good use. Traditionally, banks will lend out this money at higher interest rates that they give to depositors. But what is interesting is Silicon Valley banks is falling short on borrowers, and as a result, they put a huge portion of their money into what you call 10 years mortgage bonds. And at a very low interest rate. That was before all the interest rate hike, right? I heard it's below 2%. And with the interest rates hike that we have witnessed in 2022, the interest rates spike up. And as a result, these mortgage bonds needs to be marked to market. And that resulted in significant loss as a result, because these are available for sales instruments and they have to be marked to market. And Silicon Valley Bank has to come out to raise equity. By doing so, it got all the depositors, all the venture capital funds and startups panicking, and that's what we witnessed in the last 72 hours, right? And I would say originally it was a quiet weekend, waiting for Oscars, but it turns out to be the most exciting and unsettling weekend for a lot of American startups.
So the interesting thing about this Silicon Valley Bank case is the fact that they weren't exactly what you would call reckless with the money. They parked it in ultra safe long-term T-bills, but essentially they got caught out with the bet because of rising interest rates. With the other two banks that have just been taken over, they have exposure to crypto markets, which is probably a little bit more complex. But the key thing, Kian Soon, is how does that impact us? And have we actually averted a banking crisis?
I think the regulators, FDIC, Fed, Even Janet Yellen was involved over the weekend because they were worried about contingent risks as well as a fall in confidence in the banking systems, like what we witnessed in the global financial crisis. So I reckon over the last 72 hours, their actions was decisive, making an announcement as late as Sunday night Asian time, so as to make sure that the panic doesn't spread when Asian market reopens this morning, and I think they're still working out the details. But at least all the deposits were guaranteed. I think is as good as it gets for all the depositors. The only one that probably going to walk away with nothing are the shareholders of the banks, as well as the those who lend money to the banks.
Now, so one of the key things is also here to take note of one of the contagion risk that the Fed was concerned about, and all the Treasury officials, was really the fact that they were exposed to so many Silicon Valley companies that any sort of non-access to funds would have a cascading effect across that, according to all the startups and so forth. So this they, as you said, they acted very decisively, and as a result, if you look at the markets today, pretty mixed. Obviously, they've done their job, but Kenson, this leaves another thing which came out on Friday, but basically the news has just been buried because of this banking crisis. We had a non-farm payroll number that came in perhaps a lot less hot than it was previously, but still above expectations. What's your view on how the Fed will look at this right now?
So the non-farm payroll was a mixed bag. The numbers was better than anticipated, but I think the accelerating trajectory has started to tapers. And in traditional mode, right, the Fed will take this, into the consideration of the interest rate hikes that was expected for March. And there was a discussion whether a 50 basis point interest rate hike was on the table. But given what has happened over the weekend, I think this issue of even a rate hike, whether a rate hike will be possible for March, I think is questionable. Potentially, Fed might decide to just take a pause and see if the overall situation stabilize before they resume the rate hike in the coming months.
And Kensun, I think that's something that marks a significant change for market expectation, and that's something really for us to watch out for. Kensun, thanks a lot for coming on the show. As always, great to have you on the show.
Thank you.
Now, we've been speaking to Lee Kian Soon, CEO of Astral Asset Management, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This interview will be on our podcast and website, as well as our social media platforms. It will also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.